The uranium market has come into sharp focus recently, albeit with a political edge, as Iran increases the input into its enrichment program, which it says is to drive its atomic power stations. But what about the uranium market as a whole? And where are the potential investments to be had? John Meyer joins us now. He's partner and mining analyst at SP Angel. John, it's a fascinating subject. As I said, it's come into the public domain for perhaps maybe some of the wrong reasons recently. But we've been hearing a lot about the uranium market. Where do we stand with this in terms of the opportunities, and what's the market looking like at the moment?
Well, there is an opportunity, and there's always an opportunity to come out of every crisis. And the crisis for uranium really kicked off with the disaster at Fukushima, which caused the Japanese to shut down all their nuclear reactors pretty much immediately, because Fukushima was so close to Tokyo and could have easily poisoned a large section of Tokyo, if not all of it, if it had actually got much worse. But if we look at this in the context of the rest of the world, there's about 450 nuclear reactors out there in operation. There's another 50 being built. 15 of those are in China. They consume at the moment about 60,000 tons of enriched uranium. It's about 130 million pounds, of which 40% comes out of Kazakhstan, about 22 from Canada, and the rest from Australia mainly. The US produces a bit. They produce about 1.6 million pounds, and what's happening at the moment is there's a petition in the United States to raise US uranium content to 25% of, shall we say, local uranium production, which they're not producing at the moment, but maybe they will if uranium prices rise.
Well, talking about that uranium price, I want to talk about that in the context of the global ex-uranium ETF. I think we can bring up a chart showing this, and it just really sort of describes really what's going on with this market. How much of what's happening with the uranium price at the moment is still an overhang from Fukushima? Because that really brought into real focus for those that want to try and avoid this area as much as possible because they want to go down the green route. But nuclear energy still is one of the most efficient ways to produce energy. But is Fukushima still a sort of big shadow over the market?
It's certainly a shadow, that's for sure, because they're not buying the uranium that they used to buy. The producers were slightly slow to react to that. In fact, Kazakprom in Kazakhstan, the Kazakh state uranium company, has recently cut 9% of global production, and so they have been cutting back. Then we have the uranium yellowcake fund buying a lot of uranium out of the market, so taking that overhanging supply out of some of the big producers, which is quite useful, and that gives investors an ETF type counter to play with. So that stock is backed by physical uranium, which is quite handy, rather than a bank just replicating that.
Unlike the uranium price, we bring up the chart of yellowcake. It has had a little bit of an uptick recently, but are we just waiting for an opportunity to buy in, or do you think at these levels it does become attractive?
It's reasonably attractive, shall we say, on a fairly long-term perspective, because the market is still in oversupply. It's still problematic. If the US turn on production, let's say they raise from £1 million of production a year to 12 million pounds, for example, then they're going to displace other production from elsewhere in the world, and that might create a bit more of a surplus. Now, interestingly enough, if you're a power utility and you want to contract longer-term uranium supply, the latest contract we saw was at $44 a pound, which is much higher than the 25 that we see in the spot market. In fact, when that contract was struck, the uranium spot price was about $29 a pound. Right. So there is this disconnect between spot prices, which are really being affected by the overhang of physical supply, and the future price. So in order for new production to come in, uranium contract prices need to be struck at higher levels. And in the US, they can bring in production from where we are now to about $50. So they need higher prices to bring in a lot more production if they want to do that. But of course, it's a slightly closed world. You can't. Although it trades in a spot market, there are only certain participants that are allowed to really buy and move uranium yellowcake or uranium concentrates. So the spot market for investors and the contract market, which you can effectively acquire through buying uranium producing companies, are two different things.
Do we know any details about that contract you were talking about? Does it involve China? Because we know that China is buying a lot of commodities from around the world, and as you said, they're building 15 power stations at the moment in China. So clearly there's a big demand within China. Do we know who that contract was with?
That contract went to a trading group, right. So we don't know who they would be contracted to sell on to. Right. Certainly a few years ago, if we wind back about 10 years, the French were busy signing contracts to build nuclear power stations in China and elsewhere, and they were looking for each power station you want to contract future supply from various mines. So the French bought a uranium mine in Namibia, for example, to go with some of the contracts they were signing. So it's an interesting world, and the contract market is different from the spot market.
We've been hearing a lot about how China has, as I said, bought up in other areas of the commodities market. Are they looking to acquire offtake in a big way, China, or is it not the same for this market that it is, let's say, for lithium?
Well, we haven't seen it yet, and they may prefer to do that through trading groups that hide their names, or they may wait, because the Chinese typically do tend to wait do like to use spot markets rather than long-term contract markets. And what we saw when the Chinese became really big in buying coal, then the long-term benchmark settlements that were used by the industry fell away, and the industry went on to spot coal prices. Actually, that's been quite good for prices over the years. Spot prices have generally been higher than benchmark prices were struck at. So that's not something investors should be frightened of, but it may be that the Chinese, because of the sensitivity of uranium supply and the importance of it to nuclear power stations, that it may be that they go on to longer term contracts. But I would expect them to, shall we say, secure some supply on long term contracts and then buy quite a lot in the spot market, which would be good for uranium prices, in my view, going forwards longer term.
Yeah. What about the opportunities for the investor? I want to get into a small cap in just a minute, but quite often you get these large companies like BHP or Rio or so forth with large interests in this market. Does any of the large mining companies stand out as being a big participant in the uranium market?
Well, Rio's are the biggest producer in Australia, for example, but that's a legacy thing in reality. I mean, when you look at Rio Tinto, BHP and others, I mean, a huge amount of their earnings is coming out of iron ore, and the iron ore price is very high, so that really swamps everything else. Yeah. Even copper is looking like a poor relation within those groups at the moment. So no, don't buy Rio Tinto for its uranium production. Yeah. If anything, the management are more likely to cut that out and sell it to someone else than hang on to it. So
what sort of stock should we be looking at if there is a perceived opportunity here in this corner of the market?
Well, in the UK, we act for Aura Energy, which has a uranium project in Mauritania. That's quite a good place for the production of uranium. It's very dry, the environmental issues are minimal, and they have a plan to produce quite a lot of uranium out of that, £1 million a year. So that's a stock that's worth looking at.
This has been hit a lot. This is the London listed stock, but I think it also trades on the ASX, doesn't it, in Australia?
It's a sensible uranium project. It's probably followed the uranium price down, but I think that's a project that is more than likely to go ahead in the future. They've also got other things. They're looking at graphite. They're looking at vanadium in Sweden. So there are other reasons to back that as a stock. There's also Makango Resources. They have an exploration project with uranium in it, but I mean their main project is a rare earths project at Songwe Hill in Malawi. They just happened to find some uranium while they were in the area. And then we've got Berkeley Energia, which is in Spain, and that project is ready to go. They're just being held back by the Spanish authorities, who are not signing off on the license for the mining, in effect.
What does a uranium mine look like? I don't know if you've ever been. You go to quite a lot of mines, don't you? I mean, are they highly? There's a lot of security around them, or I mean, what is uranium like in its raw form? Is it dangerous?
For most of these mines, it's benign in reality. You would have to handle there are certain methods of handling the yellowcake, which is more concentrated after the processing. But the uranium mine looks like any other mine. Normally it's a large open pit, they're digging out low-grade uranium, and then the processing goes to a slightly higher grade for the yellowcake concentrate production at the end of that. It doesn't have to, it's not being handled like a thermonuclear device, it's not like that, but there are certain conditions. You don't want the dust blowing around all over the place, for example.
So do they tend to be in places where there's sparse population?
They are generally, but that's just the nature of the mining industry, to be honest. There are also quite a lot of in situ leaches where you're pumping acid down a borehole, and then you're withdrawing that on another borehole normally, and that's very benign. So you're literally just removing the uranium out of the rock under the ground. And that happens a lot in the States and a few other places. So, and that's pretty easy to manage. So, and fairly easy for the Americans to ramp up production there for those sorts of operations.
Yeah. Okay, all right. Insight into the uranium market. John, thanks indeed for joining us. John Meyer, partner and mining analyst at SP Angel, with us with a look across the opportunities, potential opportunities in uranium.